Some of the commentary, very interesting, from the former Chicago Fed President Charles Evans overnight, where effectively he's reminding us that history is not kind around the prospects of a soft landing, and that we could, in fact, just be one or two reports away from some sort of employment report that goes sour, which triggers the need for an aggressive rate cut. What do you make of that commentary?
Well, he's right. Soft landings, perfect soft landings are extremely rare. In fact, most people would say that the only genuine soft landing in the US was in 1995. And, the Fed cut rates in total by about 75 basis points during that period. And that is rare. Nearly every previous Fed tightening cycle has been one where they tighten until they break something, and then they have to cut rates rapidly. And usually it is in response to a sharp deterioration in the labour market. But this has been a very, very unusual cycle. We know that over the course of the last 4 years. And my bet would be that this is going to be an unusual easing cycle, neither one that we normally associate with a really hard landing, but nor is it one that we normally associate with that one soft landing of 1995, where we got just a very small reduction in interest rates.
So, Janet, what's the playbook here? Because the market at one stage was convinced we were going to get a 50 basis point rate reduction in September. Now, thanks to the data, that is mostly unwinding back to 25 basis points, with big question marks whether there could be an outsized move later this year. Do you think that is the likely playbook, or are we going to get some wildcard changes from here?
I suspect we're going to get more volatility from here. You could say that market pricing for Fed funds over the course of the last couple of years has been somewhat schizophrenic. It was just back in March 2023, amid the banking sector troubles then, that the market immediately priced in some really aggressive interest rate cuts. But of course, the Fed responded with liquidity, and instead, as far as interest rates were concerned, they continued raising interest rates. But you're absolutely right. It's only a couple of weeks ago that they were looking for 50 basis points. Now they seem to have priced in just a little bit above 30. The Fed is not a central bank that surprises. So as we go into that September meeting, it will be what is priced into markets at that point. That will be influenced by what happens to the data. And I think it actually, at the moment, is much more likely we get 25. That's certainly what we're forecasting for September. And we've got 3 25 basis point cuts by the end of this year.